Hi, this is Steve Vanderbilt with RegimeChange.org. Going to do a second piece on this toxic assets, toxic profit story we broke last night. First thing I want to do is I want to make a correction. Last night I stated that the difference in the value between a $1913 and current dollar was $83 in value. That's not correct. It's 23. My handwriting's horrible and I read it wrong from my sheet. I apologize. Let me state that we are archiving documents every day. Keep coming to the archive. Keep looking everything over. Read for yourself. Become informed. That's what our archive's there for. We've seen a lot of extra traffic over the last couple of days. I'm grateful that you guys are reading. And make comments. Send us info. Ask us questions. That's what we're here for. We are a grassroots effort trying to make a change. One thing we did today is we posted a video from CBS News that they aired January the 2nd, 2009, talking about the oil industry and speculative trading. It was very interesting what they said about Morgan Stanley. We only found that video today, which is pretty interesting, but I ask you to go look at it. You can find it on our website, www.regimechange.org. If you're on us on Facebook, you'll find a link on Facebook. Also, we posted a second video today. And that video is money banking in the Federal Reserve. It's about a 45-minute long video, but it's a dated one. But it definitely tells you, it informs you, teaches you about the Federal Reserve System, fractional banking, and the history of the Federal Reserve. Done by economists. It's a very good piece. The person who did it was very well respected as an economist. I encourage everybody to watch it. But let's get on with the rest of this brief for today. Spent a lot of time reading 10K 10Qs from the big three banks, and we'll talk about a 10K 10Q real quick. Those are quarterly and annual filings that every publicly traded company must file with the Securities and Exchange Commission to remain in business. They're very telling on what a company is doing. I've been reading 10Ks, 10Qs for several decades. I've read over 1,000 of them that I can think of off the top of my head. But there's a pattern that's developed in Morgan Stanley's, JP Morgan's, and Goldman Sachs 10K, 10Qs. And it's a pattern of what I would call seemingly criminal behavior. It's where they begin to get in, where they've gotten into businesses or making leverage towards businesses where they're looking at just litigation is another part of the cost of doing business, including the acts of criminal fines. Now, Morgan Stanley specifically over the last 5 years have paid about $135 million in settlements and fines related to their alleged criminal activity. In other words, they did something, they settled out of court. Now, what's really interesting is they profited billions of dollars offsetting those fines. So the penalty is very minor. Now, when you put in consideration that their use of TARP funds, that's only making the behavior more brazen. And henceforth, what we're seeing is going on here. When you look at TARP funds and how the Federal Reserve has applied those TARP funds, and not specifically to what the banks were calling toxic assets, which were those mortgages that everybody was saying about, but the Federal Reserve, in the form of Hank Paulson, just decided to go ahead and give the money directly to the banks. Well, that's like giving $100,000 to a drug addict. Do you really expect them to turn around and buy a house or get an apartment, find a car, get it cleaned up, get a job, get in rehab, and that other stuff? No. You expect them to go buy any more drugs. And that's exactly what these guys have done. Specifically Morgan Stanley here. We are looking at JP Morgan and Goldman Sachs, but everybody looks at Goldman Sachs. We're picking on the people that nobody's looking at right now. Showing there's more of them out there doing it than just the two that everybody talks about. Now, remember that Morgan Stanley is only capable of being a bank holding company for 2 years. This year, 2010, is the year that it lapses unless they get regulatory approval, although they do have 3 one-year grace periods where they can continue to move forward and divest the business if they have to. And I remind you, my comment from a 10K 10Q last night said that they didn't really see themselves losing money if they had to divest these businesses. And I said last night, how can you get into business and sell it without the thought that you're going to lose money when it's only a year or two old? Well, it tells you you've made all your profit up front, and here's what we're going to get to in talking about that. Now, let's sit here and say, okay, if I don't do anything as an individual, what's the big deal? Well, as I said last night, you pay 95 cents on each gallon of gasoline that you buy at the pump because of the speculation of these big banks and what they've done. And if you watch the CBS article, the CBS video we talked about, they state that Morgan Stanley at that point in time is the world's largest oil company. Yet they don't do anything in the production of oil. They're just speculators in the middle. To give you some idea about this, we in the United States, we use 19.5 million barrels of oil a day. Okay, that equates to 585 million barrels a month, a 30-day month. That means we spend $43 billion, $43,845,750,000 more or less dollars a month for oil. The cost of speculation each month on that is about $13,153,725,000. So these speculators are making $13 billion a month, more or less, in total. Now, the speculators we're talking about here are who? J.P. Morgan, Morgan Stanley, Goldman Sachs. J.P. Morgan being the largest bank or oil company out there under CBS's review, and what we've talked about in speculation. So we can basically say that Morgan Stanley is making the largest volume of these trades, because as the oil goes up, they make money. As oil goes down, they make money. They're speculating. They have no skin in the game, especially when they're using TARP funds to do so. Are you starting to get what I'm saying here yet? Now, when Obama's saying, well, we're going to go ahead and give the banks a tax of $50 million over 10 years, sorry, $50 billion over 10 years, that's $5 billion a year. My God, they're making $13 billion a month. $13 billion a month. President Obama, are you listening to that? That's 13 times 12. Let's do the quick math. That's $156 billion a year. And you're proposing a tax and fee against them for $50 billion or over 10 years or $5 billion a year. I wish my business worked so well. Now, if you're as angry as I am right now, what are you saying? Okay, you're saying, what? Well, what can I do? We're going to do some talking points first time. This is actually what you can do to help steer the course back towards the people here. What do? First, you use cash. Well, why do you use cash? Because the big banks make $65 billion a year in transactional fees on the credits and debit cards that we use for convenience. They spend $7 billion a year in advertising to get us to use credit cards. Now, if you have an ATM machine, this is the same thing as using a credit card at the counter. But if you're like me, I use an ATM card that when I go to the ATM machine and draw money out, they take and refund my fee for that terminal back. So it's zero cost to me, and it's zero benefit for the bank. It's a convenience for me. Or it's convenience for me to be able to get cash, but it's a complimentary service. Okay? If you're not with a bank that does that, search one out. Open an account that does. But by using cash, you cause another thing to occur. You take the profit potential for credit cards off the table for the big banks. The other thing you do is you cause the banks to have to carry more cash in their vaults, which prohibits their ability to fractionalize your money on your deposits that you have on hand, because you're constantly taking that cash out of your account. See, when you transact for a debit or credit card, those are credits. They still hold your cash. But when you take cash out of your bank, they don't have the cash on the reserve. What that does is it prevents them from turning around and making fractionalized profits. Okay? Watch the other video I mentioned today on money, banking, and the Federal Reserve. You'll understand what I'm talking about here. Now, using cash also reverses the flux of inflation. It prevents the banks from inflating or creating money and putting it in the economy. So what that does is that actually increases the value of the money that you have in your pocket. So you just restabilize the economy by using cash. Now we're going to ask you to speak up. What's going on here? We're going to ask you to join us on Facebook, and we're going to ask you to join our group on Facebook and spread our name around. I'm Steve Vanderbilt for RegimeChange.org. Thank you.